Other one, Paul here. Today I'm going to be going over kind of the strategy that I've been talking about. It works really well. And if you saw the last video, you saw I briefly went over. Different kind of assets that you can do. The ones that would be the most profitable if you saw that video. But today I want to kind of use the strategy that I've been talking about for the last couple of videos of the combo strategy. And I want to look at this with the stock market and kind of show you how it's used in good moments to actually look at it. Use the whole combo strategy and use it for the stock market, for doing options, or you don't necessarily have to do options, but that's the main thing. But you can use it to basically find the moments where a stock is going up. So you can use it for both. You can use it for to get in a stock to find out when it's going to go up, and you can come in and out and exit your trades like that. Like REIT platform. You can find an asset that'll move a lot and have a high percentage. You can do it with this. Or the main thing is just doing it with options. So today I want to show you how to use that combo strategy that I've talked about the last couple of videos, and look at stocks, and you can find certain moments to get in. So I'll look at a couple stocks, and we'll see how effective this is, how effective the strategy is for doing it with stocks. Now make sure you watch the last couple videos, because I'm not really going to walk you through how to set everything up. So just watch the last couple videos to get a better understanding how to set the formula up. So I'm going to jump right in. I'm just going to show you. We'll look at a couple stocks, and we'll see if this is profitable or not. Okay, so we're going to look at a couple here now. And like I said, I'm not going to run you through the formula here. If you want to know this formula, then watch the last couple of videos that I posted on this channel to really show how this works. But anyway, let's look at SPY right now. We're going to be walking you through the formula here. And basically what we want to look for is, first we have to find the moments when the 9, 90, and 95 are crossing. That's these three right here. So what we're going to do, we'll look at SPY right now, and just for video purposes, I am showing you how to do this with Robinhood, with SPY. Now you can do this same exact thing with Forex. You can trade SPX on Forex, so it's the same thing. You can do SPY on Robinhood, or you can do SPX on Forex. It's up to you guys, but it's the same thing. Or you can read the chart, and you can make money twice. So anyway, when I talk about SPY, I'm basically talking about SPX as well. But anyway, what you want to do is you want to focus. I like focusing on the hour, because I find that with this strategy, you find the best results. But you do it on the hour. If you do it on the hour, you'll have to wait a while. And part of this formula here is you have to wait for the 9, 90, and 95 to cross, and that's really your moment of entering. So you focus on the moments when the 9, 90, and 95 cross. And when that happens, your ADN oscillator should be also mirroring what is going on. So right here, I'm going to shut off all these indicators right now, because it gets a little distracting. But anyway, you see the 9, 90, 95 crossing right here. You see your ADN oscillator. You see the green line crossing the signal line right here. And the EMA difference here with the 1348, you also see. So this is telling you that the trend is going up. So this is a good trade to get into. So if you come in right at the cross, means you would enter right about here. You can look at your ADN oscillator, and you know exactly when to get out, which is, you can get out right about here, or anywhere up here. You start seeing it get weaker with the 1348 down here. So this move right here would have been about $289. So let's just find a couple more with SPY. This is a big one move. I want to see if this strategy catches it here. So we see it crossing right about here. So we see the 1348 crossing there. We see it happen a little early here. So This is a little kind of like it goes sideways before it actually starts. But, you know, it's still, if you follow the 90-95, it still honors that path there. So this is a good run if you catch this entire thing from here. And you follow your linear line to about here. You see right about here. You can follow it to here. But this is 6 days, so I personally probably wouldn't have stayed in that one. I don't hold my contracts that long. I try to do it by day. At most, I hold it for 2 days. But let's look if we can see any more. Okay, so we see, well, it's not crossing all the way right there, so I'm not going to count that one. And it's not crossing all the way on that one, so I'm not going to count that one. Let's see, let's turn that one. I think that one is crossing. Yeah, that one is crossing. So I'm going to count this one. So we see the 990-95 crossing right here. We see it crossing on the 80N oscillator right here, and we also see the 1348 crossing with the EMA difference there. So this is telling us that's a good trade. If you rode this one out, and if you rode it out till your your 80N oscillator touches it again, which is right about here. So this is 6 days. 6 days, you made a $15 difference in price. I like doing it on the day, so I would only do day, but this, if you did it on a day, this would be a $628 move. If you managed to write it out for 6 days, you would have made about $1,492. So it's up to you guys on how long you want to hold your contracts, but me personally, I don't like doing it longer than a day because anything can happen on the next market day. So I just, I like holding it on, I just daily. I find the signal with the 990-95, and then if I have enough profits, I'll just sell and wait for the next one. That's pretty much how I do it. So we see it happen again right here. See the 990-95 crossing. We see it crossing on the 80N oscillator. So, and we also see the 1348s also crossing. So this is another indication of it. So we rode this out. This is the day right here. Let's zoom in a little bit more closer. Let's see. It crosses right here. We see it crossing on the 80N oscillator. Write it out. That's 2 days. Let's go for 1 day here. Here we go. Here. Well, here's 1 day. You made $275. If you wrote it out for longer, when it starts touching the 80N oscillator signal line, yeah, it's close to $500 right there. So you get the general idea. It works really well for SPY. I think it works really well for like ETFs, but let's check on some other stocks here. Some other stocks that don't have maybe as much volume. Let's just look at some individual ones. Let's look at, well, we'll look at MicroStrategy, which is, it's connected to Bitcoin, but if you can afford the contracts of these, you'll end up making a lot of money, but they are very, very expensive. But I'm still going to show you how this would work. Now, MicroStrategy's contracts are very expensive, so until you can actually afford the contracts, you can use this strategy and focus on all the moments where it's going up. To benefit MicroStrategy, you can only do it when the signal for it is to go up. So let's just look for an up signal here. We got to look for the 990-95 to cross. So we're going to look. So that's not crossing. So to help you a little bit, you can remove the candles and you'll find your moments a lot easier. So we see it crossing right here, right about here. So this is a moment. So if you did a contract for a day right here, well, we'll do 1 day. It's an $83 difference in price. So when you, it's either, if we wrote it up by just buying and selling, you made 16%. If you did options with this, which it would have been very expensive, but you would have made $8,359 potentially for that trade. I'm gonna do another one, but this one you have to wait for it to go up to benefit from this strategy. So we want to find those moments. Here's one right here. So we see that it's crossing the 995 is crossing right here. So you would get in right here, and you can ride it up. You can buy in at this point and sell at the top a little bit. Ride it up. Well, this is 2 days. Now you would have to buy, you'd have to buy your contracts for a week, and that's probably really expensive. Let's just do, I'm gonna do 4 days, 1 day. This is just a couple hours here. That's a $20 difference in price. That's $2,000 if you did an option contract, and you made about 5% if you did it with just riding it. So let's look at something that's not really have too much expensive contracts here. Let's look at some other stocks. Let's look at Apple. Let's look at Apple real quick and see if this works for Apple. Okay, so what you want to focus on, so you want to focus on the 995 crossing, and then you want to look at your 80 and oscillator, see if you see the signal in the 80 and oscillator. So that's the next step. So with Apple here, we see that it crosses right here, and you also see it crossing on the 80 and oscillator right about here. You also see it crossing, and you also see your 1348. You're kind of late in it, but it's still crossing. So let's measure this one from here. Let's do a day. It's about a day right here. So you made a $2 difference in prices, probably about $200. But if you wrote it out for longer, till it actually touches the 80 and oscillator, you made about $600 in 3 days. So let's look at a put right here. We see the 90-95 crossing right here. We see the red line crossing up on the signal line, and we also see the 1348 is also showing us of a cross as well. So if you came in here and you wrote it out, I like doing a day, but let's just check a day. Your day results would have been about a price difference of $2.73, so you probably made about $273 in that trade. If you wrote it out longer to where the 80 and oscillator starts touching the signal line, you would have made about $600. So anyway, let's look. I'm going to look at one more stock here. We can see that this works really well. Let's look at NVIDIA. Let's see, I'm going to do NVIDIA, and I want to do Amazon real quick. Here we go. Here's NVIDIA. So NVIDIA is one I call a growth stock. It grows a lot. There's a lot of good moments of growth with this one. So what we see right here, we see the 990-95 crossing right here. So we come in right about here. We also see it crossing up on the 80 and oscillator. We also see it crossing with the 1348. So we would come in right here and we'd ride it out. Now this is 3 days, but you can ride this out. I personally don't do longer than a day, but this is a $37 difference in price. This is probably about a $3,000 move. It's probably, don't quote me on it, but it's $3,720 if you did options. I think that's what it would be. I'm not positive on that. But let's look for another moment. We see that the 990-95 is crossing right here. We see it crossing right there, and we want to write it down with a put. And we write it down, we see that it actually is crossing right about here. So we wrote that one out, here to here. You see it start touching the linear line right about here. So this is a 6 day. If you held it for 6 days, you would have made, well, you would have made some pretty good money when it going down. This is probably a $10,000 move because you had 108 price difference here, so you typically make about $100 for every dollar, so that's probably about $10,000 move right there. So you see that this strategy, it works really well. So it's a 3-step process. So real quickly, you have to plug in your 9, 90, 95, and you have to find when the lines are crossing. Now, when something is consolidating, you got to be careful for that. What I would do is I would load up my consolidation as well to see if it's actually consolidating, because you don't want to do this when something's consolidating. You won't make as much. But that's the only real problem you'll have with this strategy. If it works in your favor, you can actually ride the 9, 90, 95. Then the thing you want to do is you want to check your 80 and oscillator right here, and you whatever direction it's going, you want to make sure if it's bullish. If it's bullish, you want to make sure your green line is going above the signal line. And then, of course, the EMA difference here is the 1348. You want to make sure that it's crossing there as well. So you get 3 confirmations. But I find that this strategy works extremely well, and it works extremely well for stocks, because stocks have a constant flow of up and down, so it works really well for stocks. So anyway, this strategy, it's really effective. I do it on the hour because the hour gives the best results. If you find this on the hour, and especially if we're doing it at the stock market, you'll usually find some pretty good results doing it. The only advantage doing it on the hour is to find the signal, you're going to have to wait a while. It's not an everyday thing. It's not intraday. You have to just keep your eye open for when the 9, 90, 95 cross on the hour on the stock. And once you see that, it should lead to some pretty good results most of the time. But the only thing you got to keep your mind, keep open with the strategy is consolidation points. Other than that, it'll pretty leads in some pretty good numbers if you look at this with the chart yourself. So to set this up, you need the 9, 90, 95 EMA. You need the 80 in oscillator, and you need your EMA difference with the 1348. So I've made videos on it, and if you guys want to try this out yourself, I'm not responsible for any profit or loss. I just find out that this formula works really well. But anyway, if you guys like this video, I'm also going to be going over the strategy again. I'll be doing it with gold and the US 30, and I might do the others as well. But anyway, other than that, if you like this video, hit the like button, hit the subscribe button. I'll see you guys in future videos.